For those of you who don't know, the Great Depression was the biggest market decline in history, where the max drawdown from the peak was 86%. Now, one of the things that you can see though is after that timeline, of course, there was a major drop of 86%, but 1 year after the Great Depression was over, the market actually jumped up 123%. And of course, that continued. If you take a look into the next 5 years after that, there was a total return of about 265%. 5 years after the Great Depression. Another big decline that happened, it was in 1987. 1987 was when there was what was called Black Monday. Black Monday was one of the biggest declines of a single day in the markets, and that happened, like I said, in 1987. There was a total of about 3 months where the market continued to decline. And when that declined, it declined a total of 33% between August of 1987 to December of 1987. Now, of course, that was a short period of time where a third of the market just got wiped out. A year after, so in 1988, the markets gained 21%. Now, 21% in a single year for anybody is a very, very good rate of return. Now, of course, that doesn't mean that you got back to the initial point after Black Monday. Now, one of the things that you do want to take a look at though is in that time, if we take a look at 5 years after Black Monday, there was a total return of about 93%. 93% over 5 years. And what's even more impressive is the overall rate of return in a 10-year time period. So after Black Monday, the total return in 10 years was 335%. So that means in 10 years after Black Monday, you would have more than tripled your money by keeping the money in the investments in the market.